Three companies today, all significance for FeedForce, First Holdings, and Unseen. Let's get into it.
FeedForce, ticker 7068. The big story is EC Power. They made it a wholly owned subsidiary through a share exchange, issuing 19,400 new shares.
Right. And that acquisition feeds directly into the DX segment, which just turned profitable for the first time. 144 million yen in operating profit versus a 14 million yen loss last year. That's a real inflection point.
Meanwhile, the founder, Tsukada, steps off the board to become Group Executive Chairman, an executive officer role. They literally removed the dependency on founder risk factor. Convenient timing.
A bit suspicious, sure, but they also doubled internal auditors, set up a risk management committee, and launched an employee stock ownership plan with a 10% incentive bonus. The governance overhaul is genuinely broad.
One thing I flagged. They disclosed a financial covenant loan for the first time. With aggressive M&A and capital returns, including 800 million in buybacks, they're levering up while returning capital. Worth watching.
First Holdings, ticker 1430. This one's fascinating. They deliberately tanked real estate sales volume by 56.5% to push inventory into future periods, prioritizing margins over revenue.
And it worked. Operating profit rose 12.3% and gross margin expanded from 9.7% to 12.9%. But here's the catch. They funded 8.74 billion yen in land purchases with debt driving operating cash flow to negative 9.9 billion. Equity ratio dropped below 35%.
So they're essentially a leveraged land bank now under this new First Vision 2031 plan. They also removed language about mitigating defect liability through insurance and reserves. Why drop that disclosure?
Probably because they're relying more on third-party structural inspections instead. But with a subsidiary whose capital deficit worsened to 300 million yen, less transparency on risk mitigation isn't comforting.
Dividend up from 42 to 48 yen, though. They're returning capital while burning operating cash. Bold or reckless?
Unseen, ticker 2459. Net loss narrowed 63%, from minus 115 million to minus 42 million. Still loss-making, but the trend is dramatic.
They've fully liquidated Vietnam and Thailand subsidiaries, exiting overseas entirely. And they're pivoting hard into AI. Launched AIO Consulting for AI search optimization and partnered with AI Hack Inc.
They also acquired the Mirumo Insurance Support Service, creating a new media marketing segment. So they're diversifying away from pure B2B marketing.
The governance side is messy, though. Their auditor, Asuka, got hit with an FSA administrative penalty, forcing a switch to Keyaki. And the CEO increased his stake from 25% to 31%. Consolidating control while going concern doubt still looms.
Interesting detail. 100% female manager ratio and gender pay gap improved from 75% to 94%. Tiny company, 21 employees, but notable metrics.
All three companies flagged generative AI as a new risk. FeedForce and Unseen are actively building businesses around it. Watch whether the pivot pays off or whether AI disruption hits them first.
And First Holdings debt-funded land banking, that's the one I'd watch for cash flow stress if the real estate market turns. Back tomorrow?